I just want to introduce my current guest. Heli Raval is a managing director at Citizens Private Bank. Uh, she has nearly 2 decades of experience in the banking industry. Uh, she's probably spent more than half of those years probably focused on fund banking, uh, working closely with emerging managers, established managers across various strategies. I've got have the pleasure of knowing Haley for more than 10 years. We've worked closely together. I refer every client of mine to her and the team because of the value and the service and just the pleasure to work with you. So Haley, with that, let's start.
Thanks, Eric. Yeah, so as Eric mentioned, my name is Heli Raval, and yes, it's pronounced Haley, even though it's spelled a little different. I am a managing director at Citizens Private Bank. For those who don't know, Citizens Private Bank is a business line within Citizens Bank or Citizens Financial Group, which is the 14th largest bank in the United States, with about 220 billion in total bank assets. My team and I, we specialize in banking and lending to private equity, venture capital firms, the employees at the firms, and their portfolio companies. I would say collectively, my team and I, we have like 25 years experience just working with private equity professionals. And so today we're going to be talking about how to choose a banking partner when you're at the stage of choosing a banking partner, which is such an exciting topic for me, I will tell you. And I tell you this because most often I come across emerging managers who need to open up an account quickly because the bank that they originally established their relationship with can't get an account open in time for most often is a deal closing or a transaction. And the reality is, if you think about it, most emerging managers, not all, but most, they're deal professionals, right? So they spun out of a large firm, they are focused on the deal side, and they don't really have much experience on the operational front. So they think, all right, let me just open up a business account at my local branch or talk to my personal banker, open up this account because I have to focus on raising capital and finding deals. And so, when they do this, it's fine. And it's not really the local bank's fault or the personal banking team's fault that they can't get the account open in time. It's just that not all teams are built to bank or to support private equity firms, let alone emerging managers. And so when you're thinking about a banking partner, you want to think about having a partner that's going to be with you throughout the journey rather than just another service provider or a vendor.
Yeah,
I don't know if you wanted.
yeah, I mean, every one of my clients have been with you from the journey and have made it the journey from when you had to transition from your old firm. So it just shows the real value that you guys bring. And as a banking partner, the word partner really does fit for you and the team.
That's right. That's right. And so the way that I kind of look at it, so you're at the stage where you're like, okay, I need a banking partner because I have to open up these accounts or I want to explore a credit facility or whatever the case may be. I would always say, think of the 3 Ps. So, and try to simplify this as much as I can, but the 3 Ps are people, products, and process. The first P, non-negotiable. You always want to start with that. The second 2, you can interchange it. And I'll start with the people piece. So it really does make a difference when you're working with a team that understands the private equity industry and has experience working with funds. Your banking team should know the difference between a management company account, which is your firm's capital, and a fund account, which is your LP capital. Usually, when you do have experience in this industry, there's always some sort of sense of urgency. And that kind of, I guess, what do you call it, energy needs to match your banking partner. So when it comes down to, I realize that I need to open up a pass-through entity for this investment and it has to flow through this and I need that bank account open like now. Or I need that Fed reference number because I sent out a wire and I need to make sure that the wire was actually sent. You want a banking team that's going to say, yes, we will get you that Fed reference number soon, or here's where you can go to get it. And so that really makes a difference. especially when you're wearing multiple hats as an emerging manager. So you're the HR person, you're the office manager, you're the deal professional, you're the CFO. So I think that's one of the biggest things. The second piece from, like, I guess we'll stay in the people category, is know your team and know your day-to-day banking team. It's nice to know that person that you met at the conference or an event and that kind of sold you the bank. But when you really know your support team, they're going to be the partners that are going to move mountains for you when you really need it. So make sure you meet the day-to-day banking team. You look like
Haley,
you're going to say something.
I'm lucky enough to have you as my banking partner, so I know exactly what you're talking about.
Yeah.
Like if I need something,
Yeah.
it gets done quickly, and I don't have to think about it.
Yeah, and I mean, you look, sometimes things, may not happen as quickly as you can because it's sort of out of the bank's control.
Yeah,
But if you have that person that you can call or text, it really makes a difference.
yeah.
And then the
Agreed.
last piece within the people category, and I promise I'll move on, is pay attention to the team dynamics. So a lot of times you'll find banks that have like their credit team on one side, have their cash management or operations team on the other side, and the groups don't really talk to each other. So when you have a fire drill and you need to get information quickly, you don't want to feel like a ping pong ball going between one team or the next team because they just don't talk to each other. So you want to work with a bank that sort of brings it all together for you. And I'll give you an example. So for example, like our team, the way that our team is structured is that we have cash management professionals and we have credit professionals. But we all talk to each other and we all sit next to each other and we work very closely together. So I lead most of the cash management functions for the team and for my clients. My two partners have more of an underwriting background, so they lead with credit. But we all kind of do the same thing, but we marry both cash and credit to sort of help our clients out.
Kelly brings up something that I'm actually working on these days, which is, I'm trying to identify as a fund administrator what a platform administrator is versus a partner administrator, which is very similar to what you're saying about banking partners, which is, if you hire a platform admin, you're just getting the platform with very little interaction with the team, and you're left managing the siloed entities to deal with those and have them all communicate, right? And so, but with a partner led fund administrator like us, it really, like you said, we're kind of the quarterback around every aspect of that relationship, and we then are responsible for managing the whole process. So I know exactly what you're talking about.
Yeah, and look, I mean, technology is a nice enabler, but it shouldn't be a replacement for the people, right?
You are
So
writing the words I already wrote. You're literally saying exactly what I've written. So yes, 100%, and I believe it 100%.
yeah. So that brings me to the next P, which is products. So you have to remember every bank's product toolkit looks a little bit different, and every bank has different motivations. So when you're choosing a bank or when you're talking to multiple banks, you want to make sure you're considering that this bank has more of a scalable product solution, so that they're with you in the beginning, and then they sort of help you grow. And I'll start with like the basic banking and cash management, just because that's my expertise. And so I kind of live and breathe in that space. When you think about like your basic bank accounts or your basic banking products, you have a checking account, you'll have your savings account. Does the bank offer any special features for that business checking account? This is huge for emerging managers because what's top of mind for you guys? It's usually cost savings. How do I reduce costs? I'm out raising a fund. I'm trying to find deals. I don't have time to worry about day-to-day banking. And so some banks will offer what's called like an earnings credit allowance. Our bank does the same thing. And it's basically soft credits to help that basically you get on the average monthly balance that you hold in your operating account that's used to offset bank fees. So when you have your inflows and outflows and deal closings, you're not really worrying about minimums because you have what's called the ECR credits to offset bank fees. When it comes down to savings accounts, right? You're not going to really be sitting on cash, so it's kind of like an afterthought. But it's nice to know what are the interest-bearing products that the bank offers. You start off with your basic savings, and then as you grow, what sort of tools do they give you? Like if there's a wealth management team that can help build out a ladder T-bill portfolio for you because you're sitting on $30 million for 3 months. I don't know, just giving an example. So pay attention to the basic banking products. Don't just overlook it and just accept, kind of the standard. The next piece I would say is the platform. This is the biggest and most important product that you want to pay attention to. Does the banking platform give you the ability to customize whatever it is that they have, all the bells and whistles, based on what you need? As an emerging manager in the beginning, you don't really need a lot, right? But you do need some controls. You need reporting capabilities, especially if you're working with Reliant and fund admins, right? You need, I would say, controls around cash movement and sort of wire import capabilities and stuff. And so a lot of what does the platform offer really makes a difference. And then lastly, I would say, I actually put this in my notes and I always forget to mention it, is in the beginning you have your platform, but as you grow and scale, sometimes managers don't work off of a banking platform and they need something more like a swift connectivity. And so that's a more robust treasury management service that's usually offered. So you want to ask about those things. You may not need it now, but it's a nice to have as you grow. And so I'll touch on a little bit of the credit. So the credit products. The most common product that emerging managers want to learn about is a capital call line of credit. So when you're talking to a bank, understand what the motivation is and understand like how small of a line size are they willing to give. Most emerging managers may not need such a big line size, and it may be too small for that bank to work with. So, you want to first understand what sort of, what's their parameters around like credit facility sizes and so forth. And then lastly, understand the bank's risk appetite. So there are some banks out there that will only lend to institutional LPs, and some banks are a little bit more flexible. So for example, us, we're more relationship driven. So we will look at high net worth individuals and friends and families and sort of get granular. So there's a little bit more flexibility there. And that sort of ties into the line size. So these are some things that you really want to think about. And the last piece I'll talk about the product is you want a bank that gives you somewhat of like a one-stop solution. So do they offer any personal banking products on the credit or even cash management, mostly credit, as a GP that could possibly help you in the long run? So that's kind of on the credit piece.
It's you kind of packed it all into one little,
Yeah, that was a lot.
Yeah, that was a lot, but definitely informative. I'm sure people need to hear that. Generally, how far in advance, if an emerging manager is ready to go, should they work? Should they reach out to you?
That's a great question, and I address that in my process category, but I can definitely touch on that now. So I would say the second that you, more of like when you have your formation documents and your tax ID, you should start, having the banking conversation. It's just, and I actually realized that most managers, not all, but most, don't really follow like an interview process for banking partners like they would for a fund admin or counsel.
I've been through them.
Yeah. So start early, talk to everyone, even if like you don't have a formation document. I mean, it's just nice to know what's out there. But you definitely want to start with a banking relationship as soon as you have formation documents and TINs. And so there was one question that came through before we started this webinar. And so the question is, as managers scale through SPVs before consolidating into fund structures, how are banks evolving credit products to support that transition without penalizing managers for not yet being at fund scale? And so the reality is core products in fund finance are designed for more traditional funds, simply because of the structure of a traditional fund, right? Where lenders sort of need to have a predictable source of repayment for a line. SPVs by nature are created to fund a specific deal or an investment. So you're really only calling capital for that one investment. I feel like the fund finance industry is evolving. I mean, we're going to a conference next week that's focused on fund finance and industry trends and so forth. So I don't know what they have. That's sort of a new product, but I don't think that there's not going to be something that folks can think about, and it is evolving. But I just don't think that right now we have those sort of creative products or, especially for independent sponsors. But I will say, sorry, go ahead.
No, go. I mean, you're still a bank at the end of the day, and you need that, the ability to get repaid.
Right, exactly. So, when you think about the traditional products, it's a capital call line to a fund that has a group of LP commitments, right? Your management company line, it's to the cash flows of the business, right? Your GP financing, it's to the GP itself. So there's always some sort of, and again, I'm not an underwriter, a very experienced underwriter, so I can give you the dumbed down answer of basically why folks don't have this sort of credit products. But I will say for independent sponsors, it's still important for you to choose a right banking partner, even if there's no credit, because the track record that you're building not only helps with the fundraise, but it can help a bank's willingness to extend credit if an asset's being transferred from the SPV to a fund. And just regardless, the bank is going to know you, get familiar with the type of investments that you have. And so when you are ready to talk about a capital call line because you're ready to fundraise or you had your first close, it's an easier conversation.
I would agree. Again, it's just interesting and a lot that I'm hoping an emerging manager will listen because, it really will give them the roadmap of everything they need in the beginning of the fund. Are you coming to Miami, right?
I am.
What are you attending the event, or are you what are your situations?
Yeah. So I mentioned that there's a fund finance conference that's happening next week. It's starting on Monday, but my team and I, or the bank, we throw what we call the annual Miami event, which is sort of like the kickoff to the conference. Separate, it's not really related, but we've found that over the years, a lot of GPs attend this fund finance conference. And so most of our clients are in Miami. And so why not throw a great event for them? So I am hosting an event in Miami collectively with our actual banking partners on Monday. Should be.
And I'm going to get to see you.
Yes, that's right. I mean, even though it's going to be cold, I think it's like a high of 52.
It's 45 now or something in Miami.
Yeah. I mean, when you try to get away from New York, where it's 20 degrees, and you're going to, it's a little bit better.
Yeah.
Oh, 10. Great.
Yeah.
And so the last week.
Yeah. Oh, you have more? Keep going.
I got one more. The 3 Ps. We got the 3 Ps.
Oh, I thought you said people, process, product, and process.
Process. Right? And so process.
My bad. I can't forget the process, Ellie.
It's so important. So
of course.
The process is more of, you want to understand a bank's timeline and then the process. So starting with the bank accounts, ask about the process of opening up a bank account and the timing. How long will the account take to be fully functional and available online? And when I say fully functional, I mean where you can accept cash and you can send cash. And so that will give you an idea of when to actually start the process. Some banks can open up accounts quickly and some can't. So it can go from anywhere from 7 to 10 business days all the way to 3 weeks to months.
What determines that,
questions. I'm sorry?
What determines that? Why would something take 2 days versus 3 months?
Yeah, that's a great question. And so I would say bank's process, KYC, AML review,
Got it.
and also knowing the business. When you're talking to a bank that doesn't really have much experience, it doesn't open up SPV accounts or blockers or feeders pretty often, they're gonna really do the process from start to finish like you're a brand new client.
Right.
Whereas other banks kind of already know, okay, it's a fund, you got a GP, you got the Manco, you need to open up a feeder entity or a blocker entity that's part of this fund structure chart. And it goes back to what I said earlier about working with the team that can read a fund structure chart, that knows the difference between the different types of entities. And that sort of adds to the timeline.
Okay.
And so one of the questions that came up was, how important is AML approval before account opening? I would say the KYC and AML process usually happens behind the scenes when you actually start opening up the accounts. So I guess the AML approval part is, as long as you have your account up and running, which most times they do it in, I guess, in the beginning, you have your account, I think you're fine. Sometimes what banks will do is they'll get the accounts open, kind of do the basic checks, and then revisit the entity or sort of the transactions and stuff after. But that's just based on every bank. So I think that question sort of ties back to the account opening process and what it takes. So I would say give yourself some time, or ask the bank how long it takes specifically, so that you have a better idea of the timeline. And then lastly, for the process is credit facility. So talk about the need for a credit facility early on, just so that you understand the process and timing from start to finish. When is a good time to talk about a term sheet? I would say once you have clarity on your LP base and a general range of commitments, that'll give the credit team something to work with when they start underwriting. So I would say, you want to talk about it, you're thinking about a credit facility, start talking about it early on. Even if you're not going to get a credit facility right away, or maybe it's going to be a year down the line, it's just good to know the bank's process. A big piece that can actually help with cost for emerging managers is there is specific language that's needed in an LPA when you're looking to get a credit facility. So when you bring up the need for a credit facility or just learn about it, the bank should be, or they could recommend, like, make sure your LPA is credit friendly. When we talk to emerging managers, we always bring up the credit piece, and we do have a sample language that we share. Again, we're not attorneys, we don't know the specifics, but we have like a sample language that we share, and then they kind of take that and share it with their counsel to make sure that their LPA is, I would say credit.
I mean, that's actually great piece of information. But it sounds like they actually want to get this done while their PPM is, or their LPA is still being drafted, right? Because it gives you the ability not to have to go backwards after the agreement was signed, which is where I'm assuming all that cost savings comes into place.
Yeah, it's all about cost savings. So yeah, absolutely. Yeah, and so that's sort of what I kind of outlined. I had my notes to make sure that I'm staying, organized, and I guess to sum it up, just a few points. So it's worth interviewing your banking relationship. So make sure they know the business. Make sure that they're offering the type of products that work for you in your business and for you personally. You always want to start with the bank account opening first, because that will help you get to know the banking technology. You need to know the technology because that's how you're going to be getting wires in, sending wires out, and sort of functioning. It may not be you, it may be the CFO that you hire down the road, or it may be the fund admin or outsourced CFO that you hire, whoever it is. So definitely start the bank account opening first once you have formation documents. And then lastly, learn about the credit offerings and the underwriting process, so that you have a better idea of the timeline, even if you're not looking to get a credit facility early on.
That was great, Heli. It was, even, I was just had a thought, which is, uh, I don't understand. When we have an emerging manager, we're pitching. There's like they look at 10 different emerging fund admins, and literally, obviously it's important, but like you said, everyone should be talking to you as a comparison to whoever they're talking, right? And then they could see the difference, right? They have to, again, it comes back to platform versus partner, and so I don't think they spend enough time because they're like, oh, their bank accounts and we'll deal with it later. And again, what a nightmare
Yeah.
if you get the wrong partner.
Yeah. And many times it's more of a reaction to something, right?
Yes.
And and that's okay, right? As long as at the end of the day you find a right banking partner that's going to work with you as you grow. Sometimes emerging managers are just so used to working with the larger banks because the firm that they worked at worked with this large bank, and so the firm got all of the bells and whistles and the level. And so they think that they're sort of going to get the same level of service, but
No, no,
they're a
no.
little smaller. Yeah. So you gotta think about a few things. And so it's just yeah. So you
I've
just
been lucky
need to
enough to
talk
work with
to.
you personally, as well as every client that we can get you into, we refer. And I literally can just say every client has been happy. They've never had one bad thing to say about you and the team. And it's kind of hard when you guys, your day job is to make your clients happy. And so, I don't know how else, I don't know how else a client would want to have their banking partner. So I really appreciate the information on the three Ps. Um,
So that's
it
the
was
three P's.
the three Ps. And, I think, hopefully the emerging managers were really, or actually independent sponsors as well, right? Because you really want to get them early. Will listen to this and reach out to you directly.
Yeah, absolutely. I'm always here to answer any questions. And, I always tell sort of my network, you could be a client, you could not be a client, you could think about being a client. Um, we like to be strategic partners and
Yeah.
somewhat of like a resource. So please reach out to me if you have any questions. And I did keep it very high level, but we can definitely get into the specific products offline. So, the different credit products, the different cash management products, the bells and whistles for the treasury platform. I really didn't want to get into that on this platform, but happy to take it offline if anyone has any questions.
Well, thank you, Hallie. I look forward
Thank
to
you.
seeing
Thank you for
you.
having me on this amazing webinar.
It's, I'm only bringing on the best. So luckily, I was able to get you, get some schedule time on your schedule. So I really appreciate it. And I'm going to see you soon.
Yes. See you this
Thanks, Hallie.
weekend.
You got it. Take
Take
care.
care. Thank
Bye, everyone.
you. Bye bye.